Hello there, welcome to Market Call for the hour. David Burrows is on our show. He is President and Chief Investment Strategist at Barometer Capital Management. Great to see you, David.
It's great to be here.
He will take your calls, emails, tweets and video questions on North American large caps. North American large caps on the menu today. You can call them toll free, 1-855-326-6266. Send an email to marketcall@bnn.ca or send in your question by Twitter. Remember to include @marketcall. Or you can send in those legendary video questions. Film a quick one on your smartphone or tablet, and that gets you to the front of the line with your question. And also, the dream, winning a BNN mug. That goes out to the sender of the most imaginative video question each week. David, great to see you.
It's great to be here.
Is it a fun time to be a professional investor right now with such an unpredictable U.S. leader in the White House?
You know, I think it's an interesting time to be a portfolio manager and an investor for a whole bunch of reasons. I suppose certainly it adds some excitement with some of the tweets that come out. But really now, since last February, we've been in a very productive equity market. And we're having a little pause right now, which I don't think should take very long. But we're in a market where it's interesting. No offense to the media, but there has been this great focus on passive low-fee investing and being a sort of an index investor at precisely the moment when correlations, or the degree to which stocks behave the same and sectors behave the same, is at its lowest level in 15 years. So the opportunity to target specific themes and companies is really an outsized opportunity right now, and I hope people are able to take advantage of it.
Although, as you know, over a decade or more, most funds tend to underperform the index.
Well, that's a very interesting point, because from 1966 to 1982, the market traveled sideways in a series of advances and declines.
Horrible time, basically.
Right. And in 1979, there's a very famous article in Business Week, The Death of Equities.
Oh, yeah.
And that's, of course, the late 70s when Vanguard got its start in index investing, because that was the last time that managers had been stupid for the previous 15 years. And if you look at the S&P 500 from 2000 to 2013, it traveled sideways in a series of advances and declines. Many managers who were sort of like the index had a hard time beating it. And of course, the topic now is index investing, passive investing. But that's looking backwards. Where we are today is very low correlations. We have very strong, clear themes in this market, and the opportunity to target and be an active manager has not been better in 15 years. So we're all a product of our experiences. People's experiences were they had a tough time in that 15-year period, and I understand it. But the real opportunity is targeting. And interestingly, by 1985, market bottomed in 81. By 1985, nobody was talking index investing. They were talking about Peter Lynch and Fidelity and, you know, the people who could find the unique companies.
And is it still a market where we can do that? It's interesting, we do hear, Niall McGee of the Globe and Mail wrote a great piece a little while back. Analysts are becoming an endangered species on Bay Street.
I think that's true, because they're fairly hemmed in as to what they can do and what they can say. But I will tell you that I think that we are in a remarkably fruitful time to be a targeted active investor. And we'll talk about some of those themes today, maybe.
We are looking forward to it. Our guest today on Market Call, David Burrows, President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps. You can give David a call at 1-855-326-6266.